welcome. This is Tracy Z with Note Investing Tools, and we have some special guests here today. We are working with reps, and we're talking to a servicer. And welcome, introduce yourself.
Thank you for having us, Tracy. I'm Michelle Lester. I work with Real Estate Property Services, and Donnica is off screen, so she can introduce herself.
I'm Donnica Seymour, and I work with Real Estate Property Services.
Excellent. Welcome.
And I'm Derek Dutcher. I'm the servicing manager with National Asset Mortgage.
Excellent. So we have a couple of acronyms that run around with your entity, and I thought it would be fun to talk about how what each of the acronyms mean and what each division does, just to kind of kick us off.
Okay, yeah. So REPS is REPS, and that is the short version of Real Estate Property Services. And what we do is we're a back office service provider for servicers. And two of our clients are actually being represented on the call today. One, Georgia Mortgage Resources, is being represented by me, and the other one, National Asset Mortgage, is being represented by Derek, and that's NAM, N-A-M. So we have GMR, REPS, and NAM, all represented on the call. And what REPS is kind of the bridge between the two. So what we provide is technology, back office support in the form of accounting, the investor reports, all the data stuff that happens on our side, and we do that for both clients. And we also do marketing and sales and investor relations. So that's why when investors are calling in, they're likely to get a REP staff member, and they'll get a NAM question answered or a GMR question answered by reps, if that makes any sense at all.
Yeah, so thank you for explaining that. And it probably has to do with different states you're licensed in for different servicing, right?
Correct, right. So you want to take NAM?
Sure. So yeah, National Asset Mortgage, we are a licensed servicer in several states, mainly in the East Coast and Central United States. And we do everything from collection calls to servicing questions to sending out the appropriate correspondence, tax and insurance disclosure letters, 1098s, monthly statements, loss mitigation. We handle the loss mitigation as well, including if it continues to go further in default, bankruptcy, foreclosure, recovery. We coordinate those services as well.
Excellent. You guys are, go ahead. I'm sorry.
I was going to say NAMS is a full service licensed servicer in 25 states. And those states, rather than us list all of them, they can be found on the NAM website, which is www.nationalassetmortgage.com. So when you go there, there's a list that says literally state licensing, and you just kind of click on that, and it'll have all of those and more information, obviously, about the company. And Georgia Mortgage is licensed solely in Georgia, so there's no list of states or anything like that.
Yeah, because it's Georgia.
There you go. Yes.
Well, I know about the Georgia entity because you guys service one of my notes that's in Georgia.
Yeah, thank you
for doing such a great job on that. I'll give you a plug because I've really been impressed and appreciative of your service. We took it from a contract for deed to a note and deed of trust or deed to secure debt there in Georgia, and then that was a very seamless process. So thanks for your guys' help.
Right, absolutely. And that one was that was fun because we dealt with several outside entities to get it done. So, that did take some patience on your part, and knowledge too, and then also patience with us to get it in and done right. So thank you for giving us the opportunity to knock it out of the ballpark.
Absolutely, absolutely. So we have a lot of members that do a couple of different things. Some of them buy existing notes that already have servicing with your company or potentially some other company, but they get to choose where they're going to have it serviced. And then we also have people that are creating new notes and then boarding them from start with servicing. So let's talk about just both of those aspects. So is it possible to board new notes with you guys as well as existing?
Absolutely. And when you asked about that, that was kind of funny to me because that's exactly how we started. Oh. And so not knowing our origin story, it's funny to me though, because I know it, that I'm getting that question. So where we started years and years ago as our previous entity, National Asset Advisors, which tends to throw some confusion because we did change our names to RAP at the beginning of the year. But National Asset Advisors actually is one of the leading originators of seller finance in the country overall. Like, we've originated thousands and thousands and thousands of seller finance notes, which means from the beginning, sale process to actually engaging in the deal with the client and then writing the paper for it, we did that. So, and then when our main client, which we worked very closely with one client who had thousands and thousands and thousands of properties, they cycled out of the business. We originated all of their REO, and then they sold all of those REOs and transferred them to others. So we're very familiar with receiving from a service transfer, but we're also very familiar with originating because we've done that so much, as National Asset Mortgage was the originator. So to be asked, do we take new notes, is kind of confusing to me because that's what we did for years, right?
Like, yeah, but that's how we got started.
Yeah. So yeah, we're happy to do that. So National Asset Mortgage can actually assist with the origination. So if we have an investor who says, hey, I've got this person and they want to do an owner finance deal, can you help me write that deal or produce the paper? NAM can assist with that. Or if you say, no, I've got that part covered, I already do that, that's what I do, that's my bread and butter, I just need somebody after I do this to service it, then absolutely we can take it from that point forward. And then the other option is, hey, I bought this note from somebody else, it was being serviced somewhere else, can you please service it? And then absolutely, we service transfer it in. And there's different processes for each one of those scenarios. But at the end of the day, we don't care because we're going to service it and take it from that point of entry forward as if the same difference no matter where it came from.
Excellent. Yeah, I'm glad that people see the difference in that. So basically you can help somebody paper it up if it's a brand new deal and originate it. If they already are taking care of that, you can just service it for them after that. Or if there's existing servicing, you can continue to maintain that, or people can transfer servicing into your organization.
Correct. Right. Yeah, absolutely. All three.
Full service. And it's nice because you guys understand the owner finance product, which is different than bank originated paper.
Right. Yeah. It has its challenges, but it also has a lot of benefits for the investor, and we've seen that successfully over and over again.
Excellent. And I imagine that the costs vary on each one of those types of services. So that's just something they'd reach out to you or to your website, or how would people find out about that?
So generally, we talk cost directly because it's a variety, it's a multiple choice answer, depending on what type is coming in. So we don't like to throw out a bunch of numbers on something like this where it might be confusing. So that is a one-on-one conversation specific to the investor for what their needs are. And then once we kind of talk through, and really somebody might think that they are making sense or that they know what they want, and then talking to us, they're like, oh, no, really, this is the service that I want. So we like to initiate that conversation, get a real good sense of where they want to go with their investment, what their overall portfolio is going to look like, and then we talk fees and how we can really help them.
Yeah, and I think you're very competitive and reasonable from what I've seen with what the market is. So people can reach out to you either via your website or your phone. So let's go into what is needed to board a note. So if we're talking about boarding a note with you guys, what is needed?
So it depends. If it's a brand new note, it's different from if it's a service transfer in. But at the end of the day, the basics are the basics the same. The collateral file, whether we're originating it and creating it or whether it's coming to us, that's the basis. That's the piece that says, hey, I have a valid document that says this contract is what's being serviced, right? So if we don't have that paper, we're stuck. So we take a digital copy of that or a physical copy once it's service transferred in if we're going to be the custodian. But that document is the beginning governing factor for everything that goes forward. And then if it's a service transfer in, we need the information that backs that up to that point. So that's a servicing tape or a servicing history. And we typically do board it from a tape, which would be an Excel document that has all the fields that we require. And basically your beginning loan amount, the date of origin of that contract, the basic terms, whether your interest rate, if there's going to be any kind of balloon at the end, or if it's whatever the term is, how many payments they're going to make, and that's followed up by a maturity date, a set date, so we know it begins here and it ends here. All of that, if it's coming to us from a previous servicer, that's their bread and butter, that's what they do, that's what they know. We communicate all of that. It's pretty seamless because we all need the same things, basically. So if we don't have it and we call and say, hey, I don't see what field it's in, they're happy to point it out on that tape. It does get stickier if it's coming to us and it's a brand new note and it doesn't have that format. But again, that was our bread and butter to begin with. So we're very familiar with taking a collateral file, reading through those documents and setting it up at the beginning as well, even if it's not one that we've originated. There is a difference in price there if we're doing a manual entry than if we're doing it from a data tape, because there's a little bit more work involved with a manual setup. Now, if you have a really, really hybrid one where it's been previously serviced, but there's no data history, and it's complicated, and we have to kind of wade in and really figure it out and piece together that original collateral file and then some form of history or gap in history, that's a little bit stickier. We've done it before. We're happy to help. That's another little price involved there, too. So it just depends on what your needs are, and that's why that initial conversation with the investor to find out what's being sent to us, what we're going to have to do in order to get to the end result, so we kind of have a good defined idea of what we're doing is really important. And that's why we can't just quote fees and quote, what we're going to do. We need an idea of what we're going to do.
Yeah, what you're going to do. That makes sense. So you mentioned custodian of the original documents. On your notes, are you primarily a custodian for most of them, or what would you say percentage-wise servicing versus custodian?
Since most of what we service, we originated, we're the custodian on it because we originated it. But the stuff that's coming in, it's a mixed bag, honestly, because some owners want to hold on to it. Some have an outside source, like one of our clients has an Orion or a MetaSource where they're docked there. It really depends, and it doesn't matter to us. We just need that digital copy so that we know that there's an original somewhere, and then we can move forward. But we're happy to be a custodian if that's an investor need.
Yeah, it's one thing that I remind people, having done this a few years, is that don't just assume your servicer holds the originals. And this is no fault of them because they may not been hired to hold those originals. So when you're buying a note, even if you're leaving the servicing there, it's a fair question to ask. Where are the originals? Are they there? And if they're there, then confirm with your servicing agent that they really are there. And, just follow that through because like you say, it might be different in different situations.
And that's a really important due diligence question, not only in the process, but then a due diligence answer that they want to define going forward. And they need to determine, if I want the servicer to hold on to it, is that a service that they provide? Because that expectation might not meet that reality. So, and that's something that, again, in that beginning conversation, not in the middle, because that's a point of frustration you can run into if it hasn't been defined up front.
Excellent. Now, did Donnica want to say something too? I think maybe she was trying to say something on there.
No.
Donnica does our custodial files for the most part. She's our doc admin, so that's her daily. She probably don't want to talk about that, to be honest, because she does it all day long. But that is one of her things that she focuses on and helps us with, and she's very good at it.
Excellent. Yeah, it's an important factor. I mean, people go through maybe, and if they never have to enforce the note or sell the note, maybe they don't even realize it. But when you go to enforce it, or if you want to sell it, people are going to want to know where that original is.
Right, or go to legal. It might not be an issue if they're paying, and then when they stop paying, it becomes an issue, definitely.
The last point in time, you want it to be an issue.
Right, exactly. You're already a little bit frustrated at that point. So yeah.
So we talked a little bit about the differences between the new originations and the transfers. What do you see are some of the hurdles in getting that transfer process started?
In my opinion, because I work with a lot of the other servicers, just getting either the approval letter approved, and we try to coordinate service transfer dates. The date has to be 15 days out from the letter, so the occupant or the customer is noticed properly of the transfer. And so getting that approved, coordinating a date when the transfer will happen, because a lot of servicers try to set certain days during the month to do that, so it's easier to track. And just making sure the data is complete, or, we've had cases where there may have been a loan modification or something where the data, when we run it, doesn't match the original terms of the note, and then we find out, oh, there was a mod done. So then we have to track down that loan modification so we can make sure the figures and it amortizes correctly once it's plugged into our system.
Yeah, that makes sense. So
and another thing is to make sure the investor is set up and signed up with the new servicer. That also can put a hold on the transfer, because other servicers will not accept the transfer if the investor is not set up with their company.
Excellent. That's a good point. So make sure that you already have an account set up with the servicer where it's being transferred into. Don't just think they're going to automatically set up an account, because you got to sign the servicing agreement and acknowledge the fees and tell you where you want your money sent, right? The important stuff like that.
Right.
You guys don't just know that, so make sure. So if somebody doesn't have an account with you, but they want to have, maybe they're buying an account that's already serviced by you, or maybe they want to have it transferred over to you, what would the process be for them to come in and initiate that? What would they say to you? Hey, I want to, what should they ask for?
So usually what that is that's a call to us, to begin that conversation about the services. If it's a purchase from a seller who is already a client, that's super easy because we already have the asset, and they're going to notify us, hey, I sold this, and this is the new buyer. It's kind of already a done deal because they want to keep the servicing with you. And then 9 times out of 10 in those cases, we're doing the outreach. We're reaching out and saying, hey, thank you so much for your interest, and let's get started in this process. And then we send them the documents and start that dialogue. If it's coming to us and it's been sold and we're not servicing it, that gets a little trickier, because if it's coming to us from someone who's already our client, again, they're communicating that to us. But if it's from the outside, it really is incumbent upon that person who has the interest, because we don't know, right? And as the receiving servicer and the transferring servicer, we run into that being sticky on both sides, because like Derek said, one of his biggest confusing things is the first thing that we do is we reach out to the servicer that it's going to. And that's the same thing if it's coming to us. There's communication between the two servicers in order to initiate that transfer. And if we get to that point where they're calling us and saying, hey, we've got this person and we're sending this note to you, and we've never heard from that person, we can't perform, right? So if that's that beginning, when you're purchasing the note, figuring out who you want your servicer to be is number one before you sell or purchase, right? You want to be able to say, generally, the PSA will, in 9 times out of 10, will state who the receiving servicer is.
Yes.
That's great, but you got to make sure it's followed up with actually having that servicing contract with that servicer. And that's really easy on our side. You just call us and go through and say, hey, we want to transfer servicing to you. Send me some docs, and we send them the docs and get them signed up. It's pretty easy once we get going in the process.
Yeah, it's all easy when people communicate, right? Because nobody's a mind reader.
Right.
So it's really about communication. So better to over communicate, even if it's to send an email. Hey, I'm buying a note and it's serviced there and I want to keep it there. And it's, what do you need from me? Do you need anything extra from me? I'm a new client or I'm an existing client. Keep your eyes out for me. I mean, it's basic communication. Us as the owner of a note, you as the servicer of the note, and if you're getting servicing transferred in, you're communicating with them. So it sounds like a lot of communication.
Absolutely, there's a lot of moving parts, right, yeah, and it's helpful. The one thing that I don't know that an investor might think about is that the servicers really do have a relationship, and we do talk to one another, and we do have to communicate, almost on it's not daily, weekly basis, because we've got notes coming and going pretty much from the same 4, 5, 6, 7 different servicers all over the country, so we know each other. It's a small world, and if the communication is not there, and if the relationship isn't there, it does become difficult. And we work really hard to try to have solid communication, not just with our investors, but with our other vendors out there, to make sure that we can help if we run into a bump in the road for those investors.
Yeah. So we talked about the 15-day timeline, and that's under RESPA, right? You guys don't make that up. Those are federal regulations.
No matter who you go to, that process is going to be the same. As soon as that note is sold, it just can't transfer. You have to, again, have your doc set up with the receiving servicer and be a customer. And then the two servicers are going to talk, and we're going to say, okay, what's your next incoming batch? That receiving servicer is the one that has to approve that goodbye letter. So if it's us receiving the document, the transferring servicer is going to contact Derek, and Derek is going to make sure that the information for NAM is correct in there, because the notice to borrower, the element that is required is the time, 15 days, but also there's language in there about the payment processing, where to send your next payment. It has to be spelled out, and obviously we want that to be right, because we want to make sure the money comes to us. But those are elements that are actually required to notice to the borrower. It's not just, what that RESPA rule is to make certain that someone who, at the end of the day, that person who's making that payment has no say in this transaction that's about to occur. They're just going to automatically have to send their payment to somebody new, right? And we have to protect them and make sure they're given plenty of time and know where to send it, and that they're not going to have disruption in their payments as a result of this transaction that they didn't have any party to.
Yeah, and that's a really good segue into talking a little bit about what are some of the pitfalls in the process that affect the consumer that a note buyer and investor might not consider.
I'm passionate about this, just because it's my responsibility to make sure these notes perform. And I think that's something that is almost always overlooked, is the impact to the occupant of the home or the purchaser of the note. A lot of these customers they come to us with a lot of frustration because they weren't a part of this transaction at all. They had no idea. Sometimes, and this is something also for investors, sometimes we'll just randomly get a call from a customer that said there's somebody out of my property taking pictures, and when I asked them, yes, and when I asked them, why are you taking pictures, the person just said, well, someone's buying your home, and got in the car and took off. And that is something that we consistently deal with. So it's not just a one-off. We have a script internally that we use when we talk about these items with the customers, and most times we're not aware of it. It's, I'll typically reach out to the investor and say, hey, the occupant said this. I kind of know what that means, that they're probably shopping it, but I do call them to get confirmation of it. And a good percentage of the time, that's what's going on. There's some kind of due diligence that's happening, and just not disturbing the occupants is such a big deal, and that's a lot of frustration. So one of the script that we use essentially says that it's not the house that's being sold, it's the paper. Your contract is still into effect. Nothing will change as far as the terms and conditions of your note. The only thing that you'll really see on your end is where you send your payment to or who you're speaking with. That's the only thing that may change. And that typically, that will set them at ease.
Yeah.
But, and then, some of these guys, they go through several transfers. Someone may purchase a note and then a few months down the line sell it, or decide, hey, this servicer that I'm with, I'm not happy with, and change the servicing on it. And so we get customers that are frustrated because, you're the third servicer I've had in the last, 4 months. So those are definitely things that you want to think about, because the more obstacles that are out there for that customer to pay, the more chances are that you're going to have a defaulted contract, because they can tend to get frustrated. And if they shut off and you can't get a hold of them when you're trying to reach out to them, then it's a big problem.
It is a big problem, and I'm glad you mentioned that, because we share a similar passion. I talk to a lot of people about, you really have to consider seriously whether you want to move the servicing if you've got a good paying note, because either they get confused or they get the payers get defensive, or maybe some of them use it as an excuse. Oh, I didn't know, or I was supposed to send the payment. You have all different types of things. Certainly, if somebody came to my home and was taking pictures and said the house is being sold, which really just the notes being sold, but lots of people don't understand that, including the people getting paid $50 to do a BPO, right? So,
Right.
so
Yeah.
I mean, yeah, you really have to think about, do you really want to move the servicing? I mean, there's pros and cons to that. I mean, some people like to move it to their servicer because they get everything consolidated in one place. Maybe they feel they have preferred rates. Maybe they like the way their servicer handles debt collection or communicates. So there's all these things you have to think about. But first and foremost, we've got to think about that payer, that occupant, because saving a few bucks here or there on servicing is not going to make up for cost of defaults and enforcement.
Yeah.
Right. And to that note, we do encourage really considering what the overall goal is in choosing to make that move. But if you do choose to make that move, we also focus on making sure, and Derek, I think the NAM side does an excellent job of creating that relationship. And once something comes in, really making sure that they are building that from day one with that consumer and making certain that they understand, hey, we know you might be frustrated. We know you might have been bounced around a few times. We're going to do a good job, and here's the things that we can do. And you do a great debt letter.
Yeah, so you have some things you actually do when servicing is being transferred in. You guys have some actual things that you do outreach. So can you talk about that a little bit?
Yeah, absolutely. So when an account transfers in and goes active with us, we do within 24 hours, the goal is first 5 days being set up, but within 24 hours typically, we're doing what's called an introduction call. And it's just, hi, my name is Hector. I'm going to be your new account rep. I'll be the person that will be responsible for your account. This is our number, and he'll go through all of the information, how to reach us, the different ways that they can make payment. We do, MoneyGram. If they want to do regular mail, if they want to do ACH, we have a pay online option. So we have as many options available that we can for them to make payment, make it easier for them. That's something when considering a servicer. If some servicers don't offer that option, and the customer is used to being able to pay online, that's a distraction to them and could be a kind of a hurdle. But in addition to the introductory call, we send a welcome letter. In some cases, the contact information we get is old because especially if it's a performing note where the prior servicer really hasn't had to have a lot of direct communication, the numbers have probably changed. So we send that letter out as well. And if the account is 30 or more days past due, we send what's called a validation of debt letter. And this is something that is a regulatory requirement, but it's also very helpful because that handoff from one servicer to another, especially if the account is delinquent, sometimes customers take that as an opportunity to try to make a dispute. And, hey, no, I know it says I'm due for 10 months, but I'm current. I've always been current. So we'll have that opportunity to overcome that issue. And it could be, typically part of the transfer paperwork that we get is a prior pay history. So we can go through and validate that information and make sure that we've ironed out any of the kinks with the service transfer.
Yeah, I really like that you, in addition to the normal letters, that you actually make a phone call. That's a real value add. Yeah, and it's we have bilingual reps, so we try to make sure that we're covered. And our bilingual rep is the first person that does the introductory call, so he can handle whoever he's calling. Yeah, not knowing who's going to answer, right?
Exactly.
Yeah. So what are some common issues that you see on accounts once they are boarded?
A lot of times, as I mentioned before, it's my account is much more current than you're showing. There could be, we are very good about at tracking the escrow shortages or overages. And sometimes when we get a new account in and it's time for that annual review, they could have a huge deficit because they just weren't collecting enough. Or they could have, we've had some where they have a huge surplus, and we're trying, you know, in those cases, we try to reach out to the customer, and we do try to convince them to put that towards either a principal reduction or future payments on their account to try to roll that money back into their account and make sure it stays performing.
And that's something where knowledge on the part of the investor, so like if I was giving a list of what the investors should make sure they know so that they can help their servicer, because even though we do a great job and we have this data tape and we have a questionnaire and we have all these things that we try to get the information from the transferring servicer, sometimes we don't get the information. So in questions in terms of if there's an insurance policy being escrowed, if it hasn't been flagged from the other servicer and we have this big bundle of money sitting in escrow and we don't have any indication that there's anything but taxes, then we might accidentally think that there's a surplus, but there's not. So when as part of the due diligence, that's something that if the investor knows what they're buying and knows, you know, what is part of the escrow balance, then they can also assist us with that information, because they should know, right, as well. The seller should know that information. So making certain that even though you're relying on that, especially if you're doing a service transfer, you're relying on that servicer to provide all the information that's necessary in order to effectively service the account, but that person's losing business, right? So if they're not giving all the tools necessary to the receiving servicer, then there might be an issue. And we have run into that, where, you know, we've gotten in and there's no validation of anything, and we're digging through trying to figure out what we're recreating.
So let's talk a little bit about, as an investor, one of the biggest fears we have is that this note that we bought that we think is performing and now it goes into non-performing. So what actions do you guys take on the collection side to, you know, help minimize or move it along to get paying again?
Okay, so
another one of his questions.
Yeah, all right. So
you wave your magic wand, right, and you do some pixie dust, and you get them to pay again.
Right. Well, okay, so I'm going to try to not make this an hour answer.
All right.
So basically, there are certain regulatory requirements that need to be done. Per the CFPB, you are supposed to have a dedicated servicing rep. We currently have dedicated, our dedicated servicing reps are in two buckets. It's under 60 days and under, and then we have accounts that are 60 days or more delinquent.
Okay.
So our dedicated reps that specialize in handling those types of accounts. So the under 60s are just, usually it's pinging these people and just, we're the reminder call, oh yeah, I got to pay this bill, I'm going to go ahead and take care of it. You know, we've really expanded on our options. Adding the online bill pay is very big. Now, the one thing I will say is that is good from 0 to 45 days delinquent. If somebody's 90 days delinquent or 115 days and they're getting ready to be referred, we don't want them just paying online one payment. We have a message that pings them and says you need to contact your servicing rep to discuss your account. Accepting funds a week before legal referral is not a good regulatory step to make. So you don't want to take money and then refer something legal. That's entrapment. So we have our dedicated reps. At day 45, we proactively send a loss mitigation package, another requirement. At day 60, we'll order an occupancy check. So at that point, we want to go out and make sure somebody's in the property. If it comes back vacant, then we'll reach out to the investor, notify them, and discuss securing, well, we'll secure it right away, and then we'll discuss winterization as well, especially this time of year. Day 60, it goes to the next servicing rep. At day 90, we'll do our occupancy checks are good for 90 days. So if at day 90, the account hasn't had an OC check done in the last 90 days, we'll do a posting where they'll knock on the door or they'll post a notice to the door. All it says is contact our office. That's also very important that those vendors don't get in any kind of discussions. They're not licensed to service, and I could tell you nightmare stories from people what they've been told when somebody's gone out to the property. So we have a piece of paper that they hand them that just says contact our office. They know what it's about. Day 120, we look at legal referral. So we have a legal network that we'll refer to. We have an in-house rep that coordinates the legal action and the legal activity between the local counsel and the investor, notifying them. If the customer calls in, they'll take payments or they'll work agreements with them. At day 185, a second loss mitt package is sent proactively. And then it continues to go that route until legal recovery has occurred.
Excellent. Yeah, that's a good summary. Go ahead.
Well, I was going to say at any point, so they're papering, documenting the account to make certain that at any point, if you need to go legal, that all of the steps have been taken so that at the point of referral time, when the time has come, the elapsed time between payments received has come, that it's okay to immediately go. But they're not stopping the collection effort. They are still 100% attempting to collect. And if the customer does call in, they're working with them, and they've done a really good job about building that relationship that they're offering, mutual relief. Is this just something you can't afford? Do we need to talk about exiting equitably for everybody? They're saying, do you just need help? Do we need to talk about with the owner of this property and find out if maybe it's okay if you skip a payment if you agree at this point in time to get back on track, because things do happen, and they have those hard conversations all the time where somebody's been in the hospital, somebody's had, a loss, and they're trained and taught and scripted into getting to the root of what the reason for the default is. That's something that is scripted.
The reason for default is something that we try to obtain every single time we make contact and the customer is more than 5 days past due. And we'll explain to them that really the reason we're asking for this is not to be nosy. It's just to see if, whatever your hardship is that you're listing, we're listening to that. And is it something that we feel that, okay, you can just make a couple payments and you're you're in the clear again? Or is it something that we might need to look at a more long-term option to try to offer you? Because, our goal is to keep you in the property and to keep you performing. So, and this entire time, as Michelle said, we coordinate and we're communicating with the investors so they know. And we never refer legal without approval from the investor as well.
Yeah, there's that human side of it. And I think from my experience, some of the very large servicing entities have missed that side of it. So what's the nice thing about the small to medium companies, they give some of that personal touch that we used to give when we serviced our own notes. I know we don't anymore because it's better to have a third-party licensed servicer to be handling all of that. But that's sometimes what gets lost in the translation, right, is really listening to that human element and trying to find a solution to get them current again, or, maybe to do a mod, because really all of us, we don't want the property back. We want them to keep paying.
Right. Yeah, and we have, it's funny, our servicing reps and our customers have established these relationships that as a manager, it's so fun to listen to on the other end of the phone because they're talking like they're friends on the phone. And we've had accounts that have been transferred out where, customers have received that goodbye letter and they're so upset with us because, I want to stay with you guys. And it feels good as a manager to have that, and we hope that they continue to have success with wherever they go. But, that relationship is key because the minute you really upset them and they disconnect from you, that's the most difficult way to prevent legal recovery is if somebody just stops and they don't talk to you. So just making sure we get them to call back when there's something wrong. And
it's like the dance in a relationship, right? I mean, it's keeping those open lines of communication, right?
Yeah.
From shutting down. Yeah, excellent. Well, let's change gears a little bit. Let's talk about newly originated accounts when it's all fresh and new and we're not having to worry about delinquency at that point in time. We like to, when we're setting up new notes, to pass on that servicing fee to the buyer, the borrower, the payor. Is that something that you allow as well, and how would people handle that with your group?
Yes, absolutely. We do have a couple that are originating their own, and that's what it's documented. It again goes back to the collateral file. It's part of the agreement that the consumer signs, and as long as it's spelled out and defined, then we have a place in the computer that a field that we plug that into, and then it's just like any other, like a pass-through is what we consider it. So we're going to collect it, and we're going to pass it on to the investor, and then we're going to take it like we would any other charge. And so you see it as a collection point and then an expenditure point. And as long as it's well defined and allowed for in the contract, it's no problem for us to administer it.
Excellent, great. And what kind of suggestions do you guys have for properties where the owner's thinking of financing? Since you've done so many owner financing deals, what kind of suggestions do you have?
Well, it really depends on what they're looking to do. A lot of smaller investors, they already have the property and they already have the buyer in a lot of cases. It's somebody they know or they've done their own, marketing, and they just really need help with that origination and the paper. And we can absolutely help with that. We've done a lot of them, so we can help set. It really goes back to what the investor's needs are, and having that conversation and learning about that and really pinpointing what they want, again, is one of our strong suits. We have a variety of clients from one owner, one note owner, one asset owner to thousands. And so we span the spectrum on that. And we're really good at tailoring our business to our investors' needs. And I think that looking at the history of the companies, that's something that we've done well at. And so I can't specifically say what specific advice somebody might need because there's so many different circumstances, but I will say we are experienced and knowledgeable and have been doing this for a long time, and if somebody approaches us with a, hey, can you help me, there's likely a yes answer to that.
Can you think of something that someone's done with owner financing that you're like, wow, that was really smart, everybody should be doing that? Can you just, maybe, not to put you on the spot.
Well, if you're talking about in terms of selling only, or in terms of the contract itself, or because it really is
just to give us an insider tip.
Well, going back to, because I was thinking while you and Derek were talking about the default, it manage expectations and knowing the business and knowing what your goal is. And again, you said it when you said that you kind of were small and then you got big and you had to kind of hand your baby over and you had that high touch. So that was our origin too. We started out as a father and son company, or father and son-in-law company, that they had assets and they were doing really well with it, and they had a large customer come in and say, hey, can you do for me what you did for yourself? And absolutely, and we did, and that's where we originated all those notes and how we grew to what we are today. And their expectation has always been to do right? So do right by our investors and do right by our consumers. And we walk a thin line between both, because the investor has an expectation of 12 payments. Most would like 13, right, in a year. And then the consumer, they have their daily struggles of being able to make their dollars stretch. So having that understanding of what you want out of the business and to do right by everyone involved. So if you have somebody who's making 11 out of 12 payments, you want a performing asset at the end of the day. And so having an understanding that things happen, there's bumps in the road, be reasonable, look at the situation, whatever it is, and do right by it, and really try to look at all sides. And then we were talking about service transfer. It's frustrating for the borrower as well as for the note seller and buyer. And so you have to consider all circumstances and just think about doing right. And if 11 out of 12 payments is right for the circumstance, then that's what you might need to do.
Excellent.
And that's something, when you have an ownership transfer, servicing retained, that's another thing where, prior owner may have allowed 10 out of 12 and let us do a 2-month deferment, but the new owner, absolutely not, I don't want to do these deferments. Well, you have this customer that has been used to having this option if they need it for years, and all of a sudden ownership change. They're talking to the same people as far as they're concerned on the phone, but the rules have changed a little bit. So, we usually will try to kind of advocate that a little bit to the new investor that, hey, I want you to keep this in mind. We'll go after and try to get those payments, but here's the risk that you run into if they just can't do that and recover from that. You could be looking at a legal recovery, which would be a lot more costly than just allowing this transaction to go through.
Excellent. Now, the flip side is, what do you wish we, as your customer, would do? What would make your life easier? If we would just do what?
I think again, we have a wide spectrum of investors, and I think most are, again, it goes back to being human and having that conversation and understanding, that what the human element of the business. And we're all in this to make money because we're all in business together, right? But we are in business together, and it is a partnership, whether it's with your servicer or at the end of the day, your consumer. And so you want to make sure that you're in a relationship, a business relationship with human beings that you like and trust, and that you have confidence in, and that are going to do right by all involved. And so if the investor is doing right, and the servicer is doing right, and the borrower is doing right, then we're all really happy, right? So I think just being human and understanding that even though there's dollars and cents involved, there's also humanity and people involved.
I think that's great. Go ahead. Yeah.
I was just going to add one thing. I know a lot of investors, especially if an account starts to become delinquent, they want to get hands-on and involved in that. And they really are licensing to service. If an investor is calling an occupant and we're calling, that's a violation. So I would really kind of caution against that. And
we understand the humanity involved in being frustrated and wanting to reach out and do it yourself, but we also understand the regulation involved, and that you hired us, and that we're professionals, and trust that we can handle it.
On several occasions, I would prefer the investor reach out to me rather than the occupant, and we can discuss a course of action to take to try to get the delinquency resolved. And that's the way it needs to go, is have them reach out to their servicer, whoever it is, and try to resolve it through their servicer rather than becoming a servicer on their own, because they don't realize what the regulations that they're kind of crossing when they take that path. And they could get themselves exposed, quite honestly.
Well, I think that's one of the reasons I'm really happy that we're doing some of these interviews with the servicing companies, because it shows that, hey, here are real people. They are humans. They understand the business. You can talk to them. And so I'm glad that you guys took the time and approached me and said, hey, we want to have this conversation as well. So thank you so much for your time. I think it's very beneficial, and thanks for your service. And I'd like you just one more time remind everybody where they can get a hold of you.
Okay, so Real Estate Property Services, our website is www.propsvcs.com. That's a little complicated.
Then that's all right. I'll put it in the show notes too. I'll put a little link in there for them. Yeah.
Yeah, and then there's National Asset Mortgage. That's easy. nationalassetmortgage.com. Okay. And then Georgia Mortgage Resources is GA for Georgia, the abbreviation, and then mortgageresources.com. And the easiest thing is all of those have the investor services. So if you want to get in touch with us, you email our investor services group, and we're there. And those emails are found. You can put it in the show notes, but they're also found on the website. And that's our, if you email investor services, no matter what the issue is internally, we're going to be able to get the answers. And generally that's going to come to me or Donnica or Margaret, who is on the investor services team. So
if somebody got confused and they're like, oh, well, who am I supposed to contact? What would be the one email that would be sure to get it to the right person?
If you did the investor services at repropservices.com, okay, that would get to all three of us. And that's on a listserv. And, if one of us isn't here or unavailable, the other two are there, and you're sure to get an answer from that one.
Perfect. I'll make sure to add that to the notes too. Well, thanks. We really appreciate it. Happy servicing.
Okay. Thank you, Tracy.
Thank you.
All right. Take care.
Bye-bye. Bye.